Hello traders, welcome to Celebrate FX. In today's video we are going to be giving us an update using our trading concept, that is the smart money concept. Okay, before we proceed, please do well to subscribe and like our video to continue receiving updates from us. All right, let's dive in. So we are going to be starting with jump 25 indices. Jump 25 indices. So looking at the price movements, starting from the left hand side, the market was in a downtrend, meaning it was making a series of lower high, lower low. Okay, so there was lower high, there was lower low, and then when it got here, there was a break of structure to the downside. Okay, so there was a break of structure to the downside. So let's have this. There's a break of structure here to the downside, and then price came in, make another lower high, and then another lower low. There was also another break of structure to the downside, so we can have this. So there's also another break of structure to the downside, and then having seen this break of structure to the downside, so it is expected that in the future price is going to come in and tap into this zone. So this becomes our supply zone. Okay, so we see that there was an impulsive movement to the downside. Okay, after this, okay, which caused this break of structure. So there was an impulsive movement, and then this becomes our supply zone. So also there is a candle that trigger this downward movement, which we'll call our order block. So this will be that order block. This is it. That's the last down candle that formed before the impulsive move that broke structure. So this was the last down candle, so in a 1 hour time frame. All right, so it is expected that price is going to come tap into the zone and then it sell off, so which is exactly what we saw. So price came in the future, it tapped into the zone and it went. Now, but there's also another thing we are going to be looking at, so we are going to take our time and look at it critically. Okay, so there's such a thing as premium and discounts when we are trading. There's what we call premium and discount. So apart from understanding the movement of the markets, okay, whether it's in an uptrend or in a downtrend, there's what we call premium and discount. Okay, all right, so what's premium and discount? If we have a movement like this, okay, so there was a movement, let's say a movement like this. Let's assume this is on a 2 hours time frame. Let's assume this was on a 2 hours time frame. So this was our previous high, and this was our previous low. So now this gives us a trading range. It means when we are trading, what we are looking at, this was a previous high. Okay, so this was our previous high and this was our previous low. It means that we are trading around the zone. Okay, this is where we are trading. We are trading around this zone. Okay, so there's also what we call premium and discounts. So if I pick our Fibonacci retracement, if I come to our highest point and move down to our lowest point, okay, so you see what this Fibonacci does. It divides this range into two. So we'll see, of course, this is our 0 to 1, so the middle of it is 0.5. okay, so in this form Fibonacci retracement, any movement above the 50%, which is 0.5, any movement above it is then our premium, and then any movement below it is then our discount. So here we have the premium, and here we have our discount. So here we have our discount. Okay, so what does that mean? It means if this is our range, so if price gets to this place, we are looking at buying. Okay, we are looking at buying at this zone. Okay, so when price came in, tapped into this point, so we are looking at something like this. We are looking at for something like this. So we're looking at it for something like this, price coming in and then it goes up. So that's what we are looking at this zone. But if price gets to this zone, we are looking at shorting, we are looking at selling. Okay, so this is what we look at for. So when it comes to premium and discount, so apart from looking at whether the market is in an uptrend or downtrend, we can also look at price action based on this. Okay, our premium and our discount. So if the price is at our discount, we look at buying, but if the price is at our premium, around the premium level, we are looking at shorting the market. All right, so let's move this aside. Okay, so let's just take this out. Let's take this out. So let's go back to the chart. So as we were saying, so price came in, tapped into our zone, and then it went down. This is our 1 hour time frame. If we also look out, when price got to this place, there was also an impulsive move to the upside, which gave us a break of structure to the upside. So it gave us a break of structure to the upside. So now there was an order block. Looking at that, this is a 1 hour time frame. This is the order block. The order block, that's the last down candle that formed before the impulsive move that broke structure. This is called our bullish order block. Okay, you can check out our previous video where we look at our confluences, the things we look at for before placing our trades. There we look at bullish order block and as well as bearish order block. So this is our bullish order block, meaning this was the last down candle that formed before the impulsive move that broke structure, okay, to the upside. This is our bullish order block. So we're expecting that price will tap into this order block in the future and then it will go up. So now looking at price action, price came in. Now this is an inducement, okay, an inducement. When we say inducement, it's actually a behavior of the market whereby it does something. It's like a bait where it will make retail traders, it will create a zone that it will look as if it's a good place to place a trade. Okay, it's like a bait. So when retail traders place their entry at that zone, so what the price does, it comes in, it takes them out and then it moves. So this was an inducement zone. Okay, so when price came in, it was as though when price comes to this zone, it's going to move up. But you saw what happened. So when price came, it took out lows, people that placed their stop losses here, it took them out and then it's going up. Okay, but what we are actually seeing here, since this is our bullish order block, okay, we are expecting price to tap into this zone before it goes up. But looking at the market movement, price came in, it has not tapped in. So we saw an inducement here, okay, and then we also see another inducement created here, which is a seemingly equal low. So when we see price action like this, so this is an equal low, which is also an inducement. So we are expecting that price will still come in and tap into this zone before it finally goes up. So in that case, it's going to clear the liquidity down here. So it took out this one, it's going to take out this zone. So this is also, let's have this here. So this is also an inducement. So we're expecting that price will come in, take out these lows as well, tap into our zone, and then it moves up. So that is what we are looking at. So that is what we are looking at. And then also we can also look at it this way. That price can also come in as it's going, gets to the zone. Now this is also our supply zone, because looking at what happened here when price came in and tapped into the zone, so there was a break of structure here to the downside. So there's a break of structure here to the downside. There's a break of structure to the downside, and then we're expecting that price will come in to this zone, and then it's sells off. So we're expecting price to come to this zone and then goes down. So that's what we are looking at there as well. But majorly we are looking at a movement to the upside. So we're expecting price to come in, take out these lows, tap into our zone, and goes up. So this is our bias. That's what we are looking at majorly. Okay, all right, let's move into another instrument. All right, this is another instrument. That's jump 75 indices. Okay, so we saw a price movement here. So there was a break of structure here to the downside. BOS. There's a break of structure to the downside here. Break of structure to the downside. So, and then it went up, and there was also another break of structure to the downside. Also another break of structure to the downside. Okay, so we are expecting that price will come in. We're expecting price to come in. Tap into this zone and then sell off. Okay, this is also a valid zone because there was a break of structure here as well. Because of this break of structure, to the downside, this is also a valid supply zone. So it's expected price in the future to come into the zone, tap in, and then sells off, which is actually what it did here. But if we look up here, after this break of structure to the downside, there is imbalance. Now this imbalance is so big. There's the inefficiency here it's so wide. Okay, it's so wide. So it is expected that price in the future is going to tap in, trade here efficiently, tap into this hour zone before it sells off. Okay, so that's what we're looking at. So just like we saw here, after this break of structure, there was a break of structure here to the downside. When price came, there was a break of structure to the downside. So, and then this is an imbalance from this candle, 1, 2, 3 candle, this one, this blue one, this one, and this one. So there is an imbalance. Price did not trade there efficiently. So what we expected is, and then of course this created a zone. So what we're expecting in the future is that price is going to come in, trade here efficiently, tap into our zone, and then sells off, which is exactly what it did. Price came in and then it sold off. So it filled this void that was here, that was a fair value gap. So the same thing, it created a void here. Okay, a fair value gap or market inefficiency. So we're expecting price in the future to come in, trade here efficiently, tap into the zone. Now this will be our zone in our 2 hours. So this will be our zone. So we're expecting price to come in, trade here efficiently, tap into the zone before it goes down. Okay, so this is what I mean. to price coming in here, tapping into this place, and then it goes down. So this is what we are looking at for here. But currently there's something going on here in the market. If we zoom down to our 1 hour time frame, so this is a 1 hour time frame, 1 hour time frame. So we'll see what happened here after. There was also another break of structure to the downside. So this was the zone that caused the break of structure to the downside, and then price came in and tapped here and it sold off. Okay, and then price came in again. So remember, our buyers, our major buyers, we are saying that because of this void that was created here, that we are expecting price to come down here and goes and comes and trade here efficiently, tap into our zone, and then sells off. This is our major buyers. Okay, but before that happens, remember we talk about our premium and our premium and our discount, that apart from just looking at whether the market is in a downtrend or an uptrend, okay, to look out for a buy or sell, we can also use our Fibonacci retracement, looking at the previous high and the previous low, to spot out our trading zone, our trading area. So if I pick our Fibonacci retracement, this was our previous high and this was our previous low. If I do this, you discover that this gives us our trading range. So here is our premium and here is our discount. What does it mean? When price gets into this zone, we are looking at buying, moving up. But when price gets to this zone, this other zone, we are looking at selling. So currently price is in our discount zone, meaning we are looking at buy. Remember, this is our major buyers, that price is going to come in, tap into the zone, and then sells off. Okay, but before it sells, there's going to be a buy to the upside to get into the zone. Okay, so let's take this out. Let's take this out. So let's take this out. So also price is coming. So what do we see here? What do we see here? What do we see here? This is a 1 hour time frame. So what do we see here? Price came in and then it did this. There was a break of structure to the upside here. Remember, when we're talking about a break of structure, okay, there's going to be a candle break, a body break. We are not just looking at wick. Okay, so this is what we mean. So price came in here and then it broke this structure, it broke this previous high with a full body candle formed here. Okay, it was not just a wick, it's a full body candle. So price broke structure to the upside. Okay, and this was the zone that caused the break of structure. This was the zone that caused the break of structure. Okay, and then if you come down, this is the order block that formed that break of structure, that caused this break of structure. So that order block is our bullish order block, meaning it's the last down candle that formed before this impulsive move that broke structure. So we are expecting that price is going to come in. Okay, price is going to come in, tap into the sour zone, and then it will buy. It will buy off. Remember, this is our zone we are looking at selling, so it will buy, gets to the zone, and then probably, which is our main focus, before it sells off. Okay, so let's take this out again. So price coming down here. So this was our order block. We also saw something apart from this break of structure, another confidence that we have here. Okay, apart from this break of structure to the upside, okay, another confidence we have here is inducement. Remember, inducement is just like a bait, like a trap, caused by the institutional traders in hedge funds, whereby it will make retail traders to see that as a zone that they can take advantage of the markets, but price will come in, take them out before it moves. So we saw there's an inducement here, equal lows here. Okay, so we can have something like this there, this inducement. So this is the base, this is our zone. So we are expecting price to come in, tap into the zone, tap into this zone before it goes up. Okay, so what do we see here? We saw a break of structure to the upside, and then of course not just break of structure, there's an imbalance here. Okay, price didn't fill this whole void. It came in, it filled a little, but there's still a void here. There's still a void here that is not being filled yet. Okay, that's not being filled yet. There's still a void here. Okay, so we are expecting that price will come in. This is the inducement. It will take out this and then tap into the zone before it will buy to our major zone. So once it gets here, we'll look out for the sell properly. Okay, so that's what we are looking at for in jump 75 index. Okay, so this is it in summary. Price coming in and tap into the zone, taking out this low. This is our demand zone, and then does something like this, probably get into our main zone and then sells off. So this is what we are looking at majorly. This is what we are looking at majorly. Okay, so this is what we are looking at majorly. So take your time, go through the chart, and then wait for this as well as jump 75 indices on Deriv platform as synthetic indices. Watch out, so let's see how that plays out. So we are also going to do a recap of this trade to see how it plays out. Do not forget to subscribe, to like our videos to continue receiving updates from us. So see you in our next video. Bye for now.